Our guest this half hour, Jim Rogers, chairman of Rogers Holdings, author of a new book, A Gift to My Children. Jim is speaking with us from Singapore. Jim, good morning.
I am delighted to be here, Ken. Good morning to you.
Well, listen, we're looking at the S&P 500 up about 30% since the lows of March. Is it a bear market rally, or is it the real thing?
Well, it's awfully powerful, and in my experience, when something rallies this powerfully, it usually lasts longer than anyone expects, especially the skeptics. I am a skeptic. I don't have any, having said I'm a skeptic, I will hasten to tell you I don't have any shorts at all because I'm waiting to see what happens. But no, it's a powerful rally. We deserve to have a powerful rally after the total collapse we had, so maybe it's got a while to go, Ken.
So, just to roll out a couple of cliches here, don't fight the tape, the trend is your friend.
Well, yeah, I guess I could rattle off the same cliches. Well done. Yes, that's part of what I'm saying. It has been so powerful that I haven't wanted to step in front of it because it looks as though it's going to go on for a while.
You know, our top story this morning is those stress tests on the 19 biggest banks in the country. We were looking for them on Monday, but now it appears they're not going to come out until the end of next week as Federal Reserve and the bank examiners and the banks themselves debate all this. What's that telling you?
Well, Ken, I know that on the radio you have to have something to sell to the listeners, but I don't pay too much attention to it. It's part of the same scam coming out of Washington. I mean, they've been telling us for 2 years that everything is okay. Every month they come up with something else. They tell us everything's okay, and then 3 months later we know that they were wrong, or wrong at best, and at worst they were lying. I don't pay too much attention to this. I'm sure they're all going to come out okay from the test, one way or the other. And the ones that don't come out okay, they're going to say, "Oh, we have a plan. Don't worry." But this is all a scam, Ken. Most of these banks are bankrupt. If you really applied mark-to-market accounting in the real world, you would see that they don't have any assets, not enough assets.
Well, you say most of them. Which ones are not?
Oh, I don't know. I won't get into naming names. I'll be sued by everybody in sight. But if you just look at any of the banks on that list, you see if you look at their Tier 3 assets, the assets with Tier 3 is something where they can they just say we don't know what they're worth, and so we don't have to give a value. But even the other things where they say they give a value, most of those values are artificial. They're marked to some kind of model. And the model has not been right for years, and it's not right now.
Well, you know, Jim, I can't recall a debate on Wall Street that's lasted longer than the debate over whether to buy bank stocks now or don't buy them because you'll just get cheaper later. Where do you stand on the discussion?
I was short banks, as you may know, last year, short Fannie Mae and things like that, and investment banks. I covered them all. I don't have any shorts now in the financial community, but I'm not buying them. If the market's going to be okay, Ken, other things are going to lead the market. If the economy is going to be better, you will have bounces. Obviously, you'll have bounces in the ones that survive, but they're not going to be leaders in the new bull market if we have a new bull market. And the way to make money, of course, is to find the things where the fundamentals are unimpaired that are going to come through it okay, and put your money there. Don't put your money into the last bull market's leaders because they just will flounder around for a while.
Well, what's emerging as the new leadership?
Well, if you look at what's happened, you'll see that metal commodities. You'll see that metals are up 30 or 40% here in the last 4 or 5 months. You'll see that China's up a lot. Commodities are the only place I know where the fundamentals continue to improve. The fundamentals at General Motors do not improve. The fundamentals at Citibank do not improve. But the fundamentals for agriculture or metals or energy are continuing to improve. The supply is going down for everything.
Well, Jim, you know, if you buy commodities on the futures market, you not only have to pick which direction they're going to go, you have to pick a time frame. What's your time frame here for pick a commodity?
Well, first, Ken, that's the same thing with stocks too. You got to figure out which stock to buy and which time frame. You have to get your timing fairly accurately. I think at this point, the agriculture is probably the best place to be. Prices on a historic basis are down a lot still. I think that agriculture continues. Many farmers cannot get loans for fertilizer, even though the inventories of food are the lowest they've been for decades. So what's happening out there in the world means that we're going to have much higher prices for agricultural products, and that farmers finally are going to make a lot of money. As you know, it's been a horrible business for 30 years. All the guys on Wall Street and the money shufflers have been the ones making the money. Well, that's about to change. It's going to be the miners and the farmers and the lumberjacks who are going to have all the money.
Jim, when it comes to agricultural commodities, are you pretty much optimistic across the board? I mean, wheat, corn, beans, livestock?
Yes, I keep buying the agricultural index. Ken, if I tried to pick the right one, I'm sure I picked the wrong one. So don't ask me for a specific pick. I buy them all. I buy the agricultural index, and I hope that I'm going to make money.
Well, what role is China going to play here? For a while there, China was pretty much single-handedly driving up the cost of everything.
Well, yes, China is certainly a new entrant on the demand side for most things, especially commodities and including agricultural commodities. They will continue. The Chinese economy is in better shape than most of the Western economies. Some parts of it, that is. China's got plenty of problems, though. If the U.S. and Europe are in trouble, many parts of China are in trouble too. But the main thing is, Ken, that we just don't have any supply. We don't even have enough farmers. And most farmers in the world are old men. It's been a terrible business for 30 years. That's going to be a major change, though, Ken. It's going to be the farmers who are going to be driving the Lamborghinis in the future, and not the brokers. The brokers are going to be driving tractors for the farmers.
Okay, and taking into account the fact that farmers, at least here in the U.S., are much more productive than they've ever been.
Oh yes, yeah. Farming has been becoming more productive for many decades, as a matter of fact. But that does not preclude the fact that we have the lowest inventories we've had in decades, because for a long time the world has been consuming more than it's been producing, and we do have shortages. Many things, many acres have been taken out of agriculture and used for golf courses or places for stockbrokers, condominiums for stockbrokers, because that's been such a terrible business. Agriculture's been such a terrible business.
Well, of course, one of the problems here, at least with the grains, is it's May 1st now, planting just getting underway in much of the country, and you've got to figure out what the weather is going to be between now and harvest time next fall.
Well, yes, but remember, this is a worldwide economy we're in now. You asked me about China before. What happens in Iowa is certainly very important to all of this. But don't forget, there's Argentina and Australia and China and India and many other countries that are in the agricultural business that both produce and consume.
Well, Jim, we're looking
and the basic point is the inventories are very low on a historic basis, and unless something dramatic happens, we're going to be under continued pressure in the agricultural business.
Jim, we're looking at gold here, down 750, backing further away from 900. It's down to 883.70. Is this a short-term thing?
Well, I own some gold, but I'm not buying at the moment, Ken, because the IMF, which is one of the largest owners of gold in the world, is desperate to sell its gold. They're trying to get permission from everybody, and if and when they sell their gold, they may set a bottom. But if it goes down some more, it could go, who knows? It could go to 700. They've got a lot of gold to sell. If it does, I hope I'm smart enough and brave enough to buy more. It could go up. If it goes up, I may buy more too. I'm not selling my gold, but I do know that the IMF is hanging around with a huge block to sell.
Jim Rogers, chairman of Rogers Holdings.